So this is another stock that I have chosen not to get involved with. As I have been saying to you, your trading performance largely depends not on the stocks that you buy, but on the stocks that you choose to reject. Okay. As professional traders, we need to learn how to avoid stocks. We need to learn how to reject stocks because they could be traps in the market. We have to stack the deck in our favor. We have to ensure that the odds are in our favor. We have to ensure that all the factors, the technical, the ratings, the chart, the base, the fundamentals, we have to ensure that all of these in our favor to a certain degree so that we can have some confidence when we take an entry into the stock. Okay. Now, if you look at this stock, this is Bharat Electronics. Okay. When I see more negatives in a stock, than positives, I will not take the trade. It's as simple as that. Okay. Now have a look at this base. I don't even need to draw the base. Okay. To reject this stock because see, this base seems to be drifting down. Purely on the base itself, I can reject the stock. Okay. So if I draw this base, so that's the high of the base, that's the low of the base. Okay. So this is point 1, that's point 2, point 3, point 4, and 0.5. So there are 5 points in the base. As you know, I need minimum 4 points in the base. So that condition is satisfied. Okay. Apart from that, you look at the moving averages. So the 50-day moving average is above the 150-day moving average, which is above the 200-day moving average. So fantastic. Moving average is also fine, no problem. It is a strong stage 2 uptrending stock. So moving average is fine. There are more than 10 candles in the base, so almost 2 weeks of consolidation, that is fine. There are 5 points in the base, that is fine. So almost all of my criteria is met. But then why am I rejecting the stock? Well, you see the stock is drifting down, number one. Number two, after point number 2, I would want the stock to go in the blue zone or the green zone and stay there. Okay. I don't like a stock falling back into the red zone. So, for example, if you look at this stock, see, if you look at this base, so this is point 1, point 2. After point 2, you look at this green candle, it went into the blue zone. And after this candle, there is not a single candle inside this base which has closed in the red zone. If you observe carefully, almost all of the price action has remained in the blue zone and you have a buy point in the green zone. This is where I bought the stock. I think here or here is where I sold the stock. Okay. And now it is forming another base. See how nicely that stock has run up. Okay. So if this happens, if the stock doesn't come back into the red zone, that's a good sign. But I don't see that happening here. This is a sign of weakness. See, from here, it comes to point number 2, powerfully goes up, okay, but comes back and drifts down into the red zone. So majority of the price action here, it doesn't stay for long in the blue zone. Forget about the green zone. The stock is not even reached closed in the green zone. So if the majority of the price action is in the lower half of the base, but I should give the stock some time. Okay. So if you look at this, the stock is on here, here, 3, 4. Now I want the stock to go here, then here. That would be a healthy price movement and that would become my buy point. So I should probably give the stock more time and find an appropriate buy point in the green zone. So probably I will have to give the stock maybe a month or maybe more than a month, 1 or 2 months, and then see if it comes back, recovers. Okay. If that happens, fine. But if that does not happen, the stock is more likely to continue to fall down. I don't want to get involved in this stock. Okay. At this point. Okay. It is a stage 2 strong uptrending stock. And the fact that this stock has come in my watch list, Okay, it has come in the list of stocks which I have filtered for today. It means that the stock has met a lot of my basic criteria. So this is one of those elite stocks, but the base structure is such that it doesn't give me the confidence to buy. Okay. And now, moreover, apart from that, let's look at the Market Smith. This is the Market Smith page of the company. So let's have a look at that. Let me give you a detailed run of what I look for. So let the chart open. So let's go with daily. See, normally it doesn't take much time for this stuff to open. But because probably this is a Zoom call, it's taking time. Let me close this. Let me refresh that page. Okay. Let's see if it comes or not. While it is refreshing, let us look at these numbers. The group rank is 30, which is fantastic. Anything between 1 and 40 is fine. The buyer demand is B. I would have wanted this to be A. Okay, but still it is good institutional demand. Price strength is 83, EPS strength is 87. I would have wanted both of these values to be in the 90s. That's showing good strength. Okay, so this is another reason why I would be hesitating to buy the stock. See, if I want the cream of the crop, okay, then I want the group rank to be 20 or less than 20, because the top 40 companies, the top 40 industry groups, okay, if I can get the upper half of that, which means industry rank 1 to industry rank 20, that would be the cream of the crop. Buyer demand is categorized as A, B, C, D, E. Okay, just a second. What happens here? Okay, so buyer demand is categorized as A, B, C, D, and E. So if the buyer demand is A, that is the elite. See, group rank between 1 to 20, that's the elite. Buyer demand A category, that's the elite. Then you have price strength. Price strength here is in the 80s. If you have above 90, that is fantastic, right? Similarly, EPS strength, if you have it above 90, that is elite. So there are stocks where all four requirements are met, but that's not the case in this. Now, as you can see, the relative strength line, this line compares the performance of the stock with Nifty 50. This gray line is the Nifty 50. Okay. So let's see whether it opens here. Yeah, fantastic. So you see this relative strength line is falling. Not a good sign. We want relative strength line to be rising, not falling. Okay. Apart from that, see, the volume falling is a good sign because you have institutional accumulation. That is probably the reason why the stock has an accumulation distribution rating of B. So yes, the stock is under accumulation, but I am not getting a proper setup. The relative strength line is falling, which means the general market is doing better than this stock, which is something that I am uncomfortable with. EPS rating is 87, price strength is 83. So basically, this means that on a earnings and on a price performance basis, this stock has done better than 85% of all the stocks in the Indian stock market. Okay. Group rank is 30, accumulation distribution is B. Number of funds, see, there are 1,143 funds that were invested in the stock. Now that number is 1,405, which is fantastic. Okay. Great numbers. So institutions are buying. The management owns more than 50% of the company, which is another good sign. So there are a lot of positives here. If I look at the consolidated earnings, see, this number should be more than 40 as per Patrick Walker, which is the quarterly earnings growth. The growth of this quarter compared to the same quarter last year. That's what this number represents. And that number should be more than 40, as per Patrick Walker. If that number is not 40, then the average of these two numbers, which is the quarterly sales growth, that average should be 40%. Now, in this case, the earnings criteria is meeting. So this stock meets the Patrick Walker criteria. Okay, Patrick Walker is a veteran trader with more than 4 decades of experience. So I consider him as my mentor because I've learned so much from him. Okay, so good signs, institutions are buying, there is good earnings coming, it comes in the top industry, it is beaten more than 85% of all the stocks in the Indian stock market, master score of 80, which is decent, and management ownership is 51%. In spite of all of these factors, I still continue to reject the stock. I don't want to get involved because just as the fundamentals or these ratings are important, the chart pattern is also important. Okay, the stock has to come out of a sound chart base. So if you look at this dotted line, if you look at this base, the stock has come out of a proper base, and within the base you see these blue dots represent the high in the relative strength line, or probably it's the 52-week high of the relative strength line. So in this base, the relative strength line is not making those highs. You don't have blue dots in this base, but you have blue dots in this base. Okay, that is why when the stock finally came out of the base, at the time the price was roughly 150. Now the stock is at more than 300, 340. Okay, currently it is at 300. So the stock has doubled from here till here. The stock has doubled because it came out of a proper base. Okay, relative strength line rising, creating blue dots means it was at the highest point at that particular point in time, and there was, see, you can see drastic reduction in volume in the base, which is exactly what we want to see before a stock comes out of the base. We want to see drying up of supply. Okay, those characteristics I don't see in this base. I see this base drifting down. Okay, so from this base, if you calculate, in 175 days the stock has given a 108% return. So this is actually calculating from this. So in 175 days, which is roughly 6 months, okay, in 6 months the stock has doubled. Okay, so that's the power of looking at relative strength, the ratings, the signals that are given by Market Smith. If you don't use Market Smith, fine, you don't need Market Smith to spot these kinds of bases. Okay, so that's my reasoning for the stock. See how much time I am spending just to reject a stock, because I know that once I make a commitment, I can't back out. Then it comes to trade management. That's a different skill altogether. Okay, I don't want to get into that in this video, but given all the factors, given the base, I'm not interested. I would probably wait a month or two for the base to form properly before I commit my money to this stock. Okay, thank you so much.